Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 4th, 2020. As always, don't forget to hit the like button, subscribe to this channel, and share this video. So I'm looking at some of the news and I'm seeing some really bad news out there. It looks like, if 2020 was bad, 2021 could be catastrophic. And this is from United Nations. I think it's a great idea. If you made some money, especially with my ideas, make a charity donation. I think it's a great way to show your kindness and just a good way to keep your spirits up as well. Stocks do not care about any of this. Not suffering, not sickness, not death. They just push to all-time record highs. Small caps again are leading the markets higher. This is showing broad participation. I'll show a trade. I actually have it open. I have it open. It's called PagerDuty. Again, I have no idea what they do, and I kind of pride myself on that. Up 43% since entry. Junk debt is confirming this move higher for stocks. However, the Treasury Bonds could be looking at some pretty bad time, and I'm actually contemplating shorting treasuries, so stay tuned for that. Dollar is extremely oversold. We'll look at dollar, euro versus US dollar, and of course New Zealand dollar, which is just in the sky. Even if the dollar strengthens a little bit, gold could just collapse. And this could also be the same for cryptos, but not as much. So very briefly, I'm reading this article. UN warns of 2021 humanitarian catastrophe because because of the disruption the COVID is creating. We're seeing just really food insecurity and all kinds of issues all around the world, especially in developing countries. So once again, do consider making a donation to the charity of your choice, as again, it does make a difference, and also it makes a difference in your psychology, in your psyche. So I highly recommend doing it. All right, that was my public service announcement, and we'll get back right into the stock markets and other markets. So once again, throughout the presentation, I'll be using my trading indicators. You can see them on this chart. This is a green, blue, red, and yellow lines. These lines show support and resistance, basically. So these concepts are, I think, essential to trading. And if you have mastered this concept, you can make tremendous amounts of money by just simply looking at where the support and resistance is. So right this instant, we're seeing, this is S&P 500 futures, we're seeing a push to all-time records. Again, we're closing at new all-time record highs. News be damned. I keep saying the same thing over and over, that you should avoid reading the news when you're making decisions, on trading decisions. So I've been kind of just avoiding reading the news, or rather, I'm reading the news, but I just do not base my decisions on what to trade based on the news or how to trade. So this chart, it's pretty unequivocally bullish. I think I already showed this estimate of a move up. So we're looking at this potential cup and handle pattern. So I'm going to trace out the cup and handle. This is the cup right there, and this is the handle, and there's the breakout to new records. So we're looking at a move higher of at least 10%, or rather, at least 12% probably. So we're looking at around 4,000 at the very least before something, some kind of a, top-in pattern might take place, but that doesn't mean that the stock market will turn bearish at that point. It just means that this particular pattern may play out by that time. But for me, it actually makes very little difference because I don't really look at those patterns. So I'm going to backtrack a little bit, and I'm going to show you a couple of things. I keep showing the same thing, but I think it's good to recap of how I use the indicators and how I go about trading. So back in February 2019, there's the breakout. We went ahead and we bought at this point, and we just sat in this position for a long time. We sat in this position for until this collapse in spring of this year, in February 25th, right there. We went ahead and we exited 2020, February 2020. We went ahead and we exited. I don't have any connections to the powers that may be, so I had no way to know any kind of insider trading or anything of that nature. Yet I exited 1, 2, 3, 4 days after the top was put in. And how did I do it? I did it by just looking at the chart. The chart told me that right there where I'm hovering, there was a close below the blue line, and since I had a position since way back when, this was my trigger to exit. Then we had a collapse. If you caught this collapse, congratulations. I didn't really want to bother with it. So the reason being is because shorting equity is more tricky. It's not impossible, but it's more tricky, and I needed more confirmation. And here in March of this year, I was contemplating to short. You can see that the arrow is purple here, so I didn't actually send alerts, or I didn't short myself for multiple reasons. It was way oversold, so I was waiting for how high it will go, and it went exactly where I wanted to go. It went again above my support resistance lines. So we went ahead and again started buying here on April 29th, and we again just sat in the position. So it was several opportunities. So we're sitting in the position again, doing absolutely nothing. One day I will write a book and I'll call it Trading and the Art of Doing Nothing, because this is pretty much what you do. You just get in the position and then you sit for sometimes months on end, and you look, it's going to new all-time record highs. And how did I know it's going to go to all-time record highs back in April? I didn't, but if you look at this chart, it's pretty clear. So many people keep asking me about this. How do your indicators work? Why do they work? I keep saying the same thing. It's like Coca-Cola. Nobody knows what's in it, but it tastes good. So it's the same general principle. The code is hidden, but it works really well. And one nice thing is I can share these indicators with you, so you can have them on your chart as well. So right now we're sitting in the position again. We're doing nothing. We're waiting. We're waiting where this is gonna go. Our stop is at the blue line. You can take profits if you like, but it looks like it could continue higher. So probably best to just do nothing. Again, the art of doing nothing. Same goes for NASDAQ, QQQ. This one is just explosive. I mean, it exploded higher. I'm gonna zoom out. There's the breakout, 14th of April. And it just took off. That's 43%, even more now, 44% higher from the latest alert back in April. How did I know it was going to break out? Again, I didn't, but this is how how it works. We buy here and close above the support resistance. We have our risk control, meaning that we don't know if it's going to go higher. Sometimes it doesn't, and that's why when we buy, we have a correct number of shares that we buy for our account. We don't go out and just buy the entire all of our money into one trade. There is reasonable risk control behind this whole setup. So when we bought, we put our stop at the yellow line. So if it closed against us, we would have just exited and had a small loss. But in this case, it was a tremendous win. And this is how we make money. We make money by having large wins and small losses. My personal record right now is I have I make $3 for each dollar I lose. So I do lose money. You know, if you are gonna go, you know, get somebody's service and they're gonna tell you, oh, you don't lose money. You know, you should probably run away right away. You do lose money, but you have to cut your losses quickly and make your winners outweigh your losses by a significant margin. Ideally, that margin should be 2 to 1 or higher. But even at 1.5 to 1, you can still make decent amount of cash. Anything above 2 is just spectacular. Right now I have 3. I make $3 for each dollar I lose, and I am extremely happy. So with NASDAQ, you know, it's generally speaking the same pattern as I just showed for S&P. This could be like a cup and handle pattern. I'm going to trace it out. So there's the cup, and there's the handle, and there's the breakout. So the depth of this pattern is 17%. We could do the same thing as we did with S&P and see where that takes us. So it takes us quite high. This is NASDAQ ETF. So we're looking at like 360, 350 for NASDAQ ETF before anything meaningful, like any kind of meaningful resistance could happen. And you know, once again, I don't really use this cup and handle kind of business, but people do like to have those patterns as well in their mind. So it's a nice target. My stop is still at the blue line. So if I was, you know, if I entered back here, then I would have been still trailing at the blue line. My position would be still open. Notice how what's nice about this is that your price is way above the stop, and you do not get stopped out easily. So that's why I like to trail kind of significantly away from the price action. Otherwise, you could easily get stopped out prematurely. And here are the small caps, IWM. This one actually again went to new records, really strong, really. I mean, this is one of the strongest out there. You can see multiple alerts back in May. Latest one was just beautiful. Notice how it just came right to the support resistance line on 24th of September. We went ahead and we bought it there, and it just took off. Almost 31% already, and once again this could easily continue higher. The correlation between different stock funds, so you know, NASDAQ, QQQ, and S&P 500 and small caps and Dow Jones, it's very high correlation. In other words, they tend to move together in lockstep. So it does make sense, and in this case, the fact that S&P, or rather the Russell 2000 small cap index is leading the market higher is actually a very good sign, because it shows relatively broad participation. Okay, so this is a stock called PagerDuty. I keep saying like the same thing, that I really don't know what these companies do, and I really don't care what they do. What I do care about is this pattern. So this is a relatively new company, but what I really liked about it is notice how back in June the distance between the yellow and the green support resistance lines was huge. It was like $31. The same distance just a few months later, right there where the breakout occurred on 31st of July, was significantly lower. It was only $17. So what I liked is this narrowing. It's called the narrowing of a trading range. And when the trading range is more narrow, we have less risk, because if we were buying it back here in June and we saw a close above support resistance here, it would have been, we would have had to put our stop at the yellow line, and the distance would have been large. So I can kind of show you how much that is. This would have been a $21 stop. Whereas back here in August, this would have been only a $12 stop. So almost half. And this is what I like. I like low risk entry. So to me, this was a low risk entry. Now, I didn't enter it back here because it was not on our radar, but I entered a little bit later, and actually the price was even better. So I entered myself here on the 4th of November, and I bought it at $29. My stop was at the yellow line, and until the target was reached, target was about, where I'm hovering right now. At that point, I moved my stop, which was down back here. It was a wide stop, and people kind of criticize me for this. Is that, Alex, but this is a huge stop. And I'm telling you that it actually makes life a lot easier if you have large stops, because you don't know if it's going to go immediately in your favor. It might, or it might not. So it's better to have significant amount of room for the stock to fluctuate before your target is reached. But once your target is reached, then we show no mercy. Then we go ahead and advance our stop immediately. So at this point on 24th of November here, I actually sold a quarter of the position to guarantee a profit, and then I took my stop, which was back at the yellow line, and I advanced it to my entry. So at this point I can't lose, and in fact I have a profit. This is the essence of my technique. Many people kind of overthink the trading, but in fact it's sort of kind of like I don't know if you ever participated in martial arts, and what they teach you is the 1-2 punch. So with one hand you distract the opponent, with the other hand you really hit the opponent really badly. So, and that technique 1-2 punch it's stupid simple, but it really is effective. You distract with one hand and you knock out the opponent with the other. So it's the same thing what I do. My technique is stupid simple, but it works really well, and my subscribers make tons of money. I make tons of money. So this is kind of like that technique. And additionally, we look for narrow trading range, so low risk entry. And in this case, nice. It just popped higher, 43%. I mean, I can't ask for anything else. It's beautiful. So I'm trailing higher. Right now I moved my stop to the blue line, so I'm actually above my entry already, and I have profit. So the essence of this thing is, make things simple. Don't overcomplicate things. Notice I said nothing about what this company does. I have no idea, and I don't want to know. All I want to know is I like this pattern. I like this narrow trading range. I like the way it acted, and it's acting correctly, appropriately. You also will notice that there is no volume on this profile, on this chart. You know why? Because it's also useless. You do not need to know the volume. I mean, you will need to know the volume in the sense of if it's really low volume and you have a very large account, you may kind of like just buy out all the stocks. But vast majority of the time you have plenty of opportunity, plenty of volume to get your shares. And for large cap stocks, that's not even an issue. So notice how simple things are, and yeah, simplify things. All right, so junk bonds. One of the reasons why I did not decide to short stocks back in April is because of the way junk bonds acted. Notice that junk bonds really popped higher significantly earlier than S&P 500. Let me show you again. S&P 500 back in April didn't break out until late April 29th. Well, while the junk bonds, they broke out on the 9th of April. So another reason why I was just I did not really want to short equity is because of the way junk bonds acted. And I was absolutely correct. I actually bought myself right there where I'm hovering, 22nd of May. sold quarter here, and then I'm still holding the sold a half rather, and still holding the rest. So junk bonds and stocks, they correlate, they move together, just like S&P 500, the NASDAQ, and the small caps, and the Dow Jones, they sort of do the same thing. So junk bonds also sort of do the same thing as the stocks. The junk bonds are not really investment grade, they're more like stocks. They trade kind of like stocks. So the way I'm looking at it, junk bonds are confirming the move higher for stocks, yeah, we're just gonna treat them as such for now. Now treasuries, here's a very interesting chart, I think, and again I highlighted this for the past few weeks already. I actually bought treasuries right there, 10th of September, so I still am holding a long position. I bought them, I did not short them. What worries me currently is the Treasury bond yield. So this is TLT, Treasury Bond ETF, which holds long-dated treasuries. TYX, Treasury Bond yield, it's the opposite. It moves the opposite of Treasury bonds. So currently, Treasury bonds are approaching, or I'm sorry, Treasury bond yield is approaching this 1.81 level. You can see it on the chart. This is actually percent, 1.81% yield for 30-year Treasury bonds. Now, up till now, I had no questions about this. You can see it was just continuing lower and lower, making lower lows and lower highs. We traded bonds. You cannot really trade yield, but you can trade bonds. So we traded the opposite. We bought bonds. We made good money on that as well. But right now, things are apparently changing. And what I can do is I can also turn on what I do. Sometimes I look into the future. So I have, my MasterCharts Trading Price Action Indicators 2.0, and I have the newer version of 4.0, and they're not yet out, but you can sign up and just wait for them to come out. But notice what's happening here. So the price of yield is currently at 1.73 or so. Do you see how close it is to the breakout? This would imply a breakout for Treasury bond yield. It would imply a bear market for Treasury bonds. You see. So what I'm waiting for is a close above the support resistance line currently at, if I go back, it's $1, or rather 1.81%, and we're really close. Additionally, in the future, this yield would be even lower, or rather this level that would cause me to think that we're about to enter a bear market for bonds is even coming down more. So I am my finger is already itching over a buy button for Treasury bond puts. I'm thinking of shorting treasuries, long-dated treasuries. Am I going to be correct? We're about to find out. I think we're getting very close to some sort of a monumental shift in the bond market. So now the thing is, I keep mentioning Bill Ackman, the hedge fund manager, also is short bonds, investment grade corporate bonds. So maybe he's seeing the same thing as I'm seeing. So we'll find out very soon. But this is getting really, really interesting. So this could be a very interesting trade relatively soon. So what would happen is, you can see it's approaching, TLT is approaching this is Treasury bonds, approaching the bearish levels. We're getting close. So at this point, if TLT gets below 152, I think I'm gonna buy puts on TLT, and I'll close my long position obviously as well. So let's keep an open mind. What do you guys think about is the Treasury bond market about to reverse? Make a comment. See what I'd like to actually find out what you guys think. Okay, and let's now switch gears into the Forex arena. This is DXY, dollar currency index. So dollar currency index entered the bear market in June of this year. You can see a couple of nice opportunities to sell it, to short it. One back in the beginning of June, one in the end of June. Now, this move it just feels overextended. I don't use, concepts such as oversold or overbought in my trading, but this thing is oversold. So let's look at some individual currencies. So this is euro versus US dollar. If you're, these are actual alerts back in June again. If you are, a currency trader and you open the euro versus US dollar position, that is a close to 1,000 pips. So 8% gain, 973 pips gain. Now, if I had a position open like this, I would be seriously considering selling it now. So this is pretty clearly overbought. You can put all kinds of indicators on this. I'm sure you will see that it is overbought. Overbought sometimes becomes more overbought, but this thing is just way out there. So what I'm thinking is maybe we'll see a dollar bottoming here. Maybe we'll see euro topping out here. Here's another one, New Zealand dollar. Again, an actual alert back here on the 2nd of June. And look at the size of this move. This is almost 800 pips move, Definitely overextended. So dollar was under pressure, but I feel like it's about to snap the other way. And so if that happens, then now we're looking at gold. This is gold futures. So why do I care about gold futures? It's because gold futures are expressed in dollars. And if the dollar strengthens, then gold would continue lower. So looking at this gold chart, up until quite recently, it was unequivocally bullish. In fact, we traded it. This is an actual alert back in March of this year, 20th of March. This was as much as 35% gain. Now, I actually showed this chart in the past, so I'm going to show you again my thinking, my reasoning. This candle here on the 9th of November worried me greatly. I called it enormous red candle. Large red candles like this they don't just happen out of the blue. So this close on the 23rd of November, you can see it's a close below support resistance, below the blue line. This was my trigger to exit anything gold related. Again, I sell and I showed this to my subscribers, and hopefully they exited. So right this instant, we're kind of just touching the support resistance line. And again, if dollar strengthens even the tiniest little bit, we could see a collapse in gold. So let's be on the lookout for this, because bear market for gold is really not far off. Bear market for gold is at 1690. And what would happen if we see a close below 1690? That means we're reversing our thinking. If before we were buying gold, you see trending up, then down here we could see lower lows, lower highs, lower lows, lower highs. I'm not predicting it, but there is a good chance of that. Okay, so what I'm seeing right now is that if I had any gold positions, I would be out. That's the important thing for me. So I am actually out of all of my gold positions and silver or whatever. If you think that I am wrong, or if you think there is a different analysis, I'm actually very interested in hearing it as well. So do make a comment, and we'll go back and forth. All right, and finally, here's Ethereum. So cryptocurrencies, I mean, they are traded versus the dollar. So if dollar strengthens, wouldn't it make sense for, because it's ETH over USD. So if lower part of this equation, USD strengthens, it should pull this currency pair lower. Now, cryptos are not as prone to effects from the dollar fluctuations as, for example, precious metals, but I'm not taking any chances. This is an actual trade for me. So I bought Ethereum here on 24th of September at 344. Sold quarter at my first target, advanced my stop to entry. It continued higher. I sold another quarter a few weeks later. And right now I'm just not really sure what's going to happen. I mean, it hit a new high here, so I was up as much as 84%. So I decided to lock in more gains, so I sold another quarter. So I have a quarter of the position remaining. If it closes, if it continues higher, then I'll trail it higher. But if it doesn't and it continues lower because of the way I just described it, the way dollar is behaving, then, oh well, I will be out of this position at a sweet profit. So once again, I don't really worry about too much, about losing my position, and I like to take profits, and it's been working wonderful for me. Like I said, I have a profit factor of how many dollars I win for how many dollars I lose of 3 to 1. So I win $3 for each dollar I lose with my techniques. And since we're coming to a close, this is you can find out more about my indicators by going to MasterChartsTrading.com. You can also go to everyonecantrade.com. Goes to the same place. So I restructured this a little bit, and we will see a price increase very soon. So I would highly recommend you guys sign up right now. Currently trading indicators, these things, the green, blue, red, and yellow line, are only $30. This will increase. I'm within a week, I would say. So do sign up. The ultimate bundle, I think, is a steal because you not only you get the indicators, you get tons of alerts about the things that I just showed. So, for example, this PagerDuty. This was part of the new newsletter, which is called the Stock Speculator. The Stock Speculator may end up being in a separate newsletter. And once again, this is $50 right now. I'm thinking the ultimate bundle or the entire thing will go over $100. So consider signing up. So there's PagerDuty, for example, using my indicators to trade it. So again, consider signing up now. I send alert about all kinds of stocks. You also get what's called a stock screener. So you will be able to find stocks that are, for example, breaking out above the blue line and then act on them yourself. All right, so that's it for this week's recap. Again, if you have any questions, please let me know. Thanks for watching and have another great trading week. Bye-bye.